Just in, a precision nighttime strike has just eliminated a massive target. Iran's intelligence minister, Esmail Khatib, is dead, a devastating blow to the heart of Tehran's security apparatus. And now, the entire region is bracing for the fallout. Stay with me. The implications are huge. This event could change the global financial system forever. And the markets are already flashing red. Reports are flooding in right now. Under the cover of darkness, a lethal strike hit its mark. State media claims the intelligence chief was assassinated overnight. The footage from Tehran today is absolutely surreal. Massive crowds are gathering for the funeral. Black flags are flying across the capital. And the rhetoric is reaching a dangerous boiling point. The newly appointed leadership is not holding back. They are officially vowing total revenge, total and absolute retaliation for this midnight strike. But military officials on the other side deny direct involvement. The classic shadow war is now completely in the open. Now here's the key point. This is not just a political assassination. This is a massive economic earthquake, and the tremor is ripping through the financial markets. Let's look at the global energy sector. Crude oil prices are reacting violently this morning. Traders are terrified of one specific scenario. What if the Persian Gulf becomes a no-go zone? What if the Strait of Hormuz is completely blocked? 20% of the world's oil flows through that choke point. If retaliatory strikes disrupt commercial shipping, we could see oil rocket past $100 a barrel. Some analysts suggest it could go much higher. Imagine $150 oil. It would instantly crash the global supply chain. And this is where things change. Higher oil means higher gasoline prices for Americans. It means the cost of manufacturing and shipping skyrockets. Inflation would come roaring back with a vengeance. And the Federal Reserve would be totally trapped. They cannot simply cut interest rates if oil is exploding. They might even be forced to hike rates again. Right in the middle of a slowing global economy. That is the exact recipe for stagflation. And Wall Street absolutely hates stagflation. But something important happens here. When panic hits the streets, smart money moves fast. Capital is fleeing risk assets immediately. Investors are dumping vulnerable equities and tech stocks, and they are running straight into physical gold. Gold is catching a massive bid today. It is doing exactly what it was designed to do, protecting wealth during extreme geopolitical crisis. Physical bullion dealers are reporting a surge in demand. Premiums are jumping as retail investors panic buy, because when bombs fall, people want hard assets. But what about the digital age? Could this be the moment Bitcoin proves itself? The reaction in the crypto markets has been incredibly volatile. Initially, Bitcoin took a very sharp dive. Algorithmic trading bots panic-sold the breaking news. Liquidations wiped out millions in leveraged long positions. A massive wave of fear dragged the entire market down. But then, the market structure shifted dramatically. Bitcoin found massive support at key technical levels. Whales stepped in and bought the fear. Many analysts suggest a new narrative is forming right now. Is Bitcoin becoming the ultimate wartime hedge? A decentralized asset with absolutely no counterparty risk. An asset that cannot be seized, frozen, or sanctioned. If traditional banking systems freeze up during a conflict, people need a way to move value instantly, and the blockchain never sleeps. Let us circle back to the crypto dynamics. Bitcoin is showing resilience, but altcoins are bleeding heavily. In times of severe geopolitical stress, capital flows out of highly speculative tokens. It flows directly into the largest, most secure network. Bitcoin dominance is climbing rapidly today. Institutional money wants the safety of high liquidity. They do not want exposure to untested crypto projects. Analysts suggest this trend will only accelerate. If the war expands, Bitcoin could fully decouple from stocks. It could trade entirely on its safe haven properties. Let's talk about what happens next, because the danger is nowhere near over. State television in Iran is broadcasting continuous military threats. The new intelligence leadership has a major point to prove. They need to show strength to their domestic audience, and they need to project power to their regional proxies. What if this triggers a coordinated multi-front assault? What if energy infrastructure becomes the primary target? We have seen drone strikes on major refineries before, but a full-scale regional conflict changes all the math. Defense contractors are already seeing their stocks surge. The military-industrial complex is pricing in a long war. Let us dive deeper into the Persian Gulf dynamics. What about the neighboring Gulf countries? Saudi Arabia and the UAE are watching very closely. They are caught right in the middle of this escalation. Their economies depend entirely on secure shipping lanes. Reports indicate their military forces are moving to high alert. If regional stability collapses, foreign investment flees immediately, and billions of dollars could leave the Middle East overnight. Now here's the key point. The American consumer is already financially exhausted. Credit card debt is sitting at absolute record highs. Personal savings accounts have been completely drained. If gas prices jump by another $1 or $2, it will act as a massive tax on the working class. Discretionary spending will simply vanish from the economy. Retail stocks will take a brutal beating, and the global banking system will feel the stress. You cannot let emotions drive your portfolio today. The mainstream headlines are designed to create pure panic. But panic is the ultimate enemy of wealth preservation. You must look at the hard data. Watch the bond market very closely this week. Treasury yields are moving in wild and unpredictable ways. The US dollar index is showing massive strength, because in times of war, the dollar is still king. But a strong dollar crushes emerging markets globally. It makes dollar-denominated debt impossible to repay. We could see sovereign defaults if this pressure continues. And this is where things change. The assassination of Esmail Khatib is a major catalyst. It is a lit match thrown directly into a powder keg. The funeral processions in Tehran are just the beginning. The vow of total revenge is a promise of market volatility. Will the retaliation come from the sky, or will it come through crippling cyber attacks? A major cyber attack on U.S. financial infrastructure that would paralyze the global markets instantly. Analysts suggest this is a very real possibility right now. You need to be prepared for massive price swings. The volatility index is shooting straight up today. Fear is officially back in the driver's seat. Governments will need to fund these new conflicts. And how do governments fund massive wars? They issue mountains of new sovereign debt. They print trillions of new currency units. This dilutes the purchasing power of your life savings. It is a hidden tax on your entire life. And the markets are pricing this in right now. So what should you do right now? Hold your core positions, but aggressively manage your risk. Do not trade on pure emotion today. Keep a close eye on the price of crude oil. Watch how Bitcoin reacts to the weekend news cycle. Watch the crucial resistance levels in physical gold, because the next few days are absolutely critical. The global economy is walking a dangerous tightrope, and this specific assassination, this might be the wind that finally knocks it over. We are watching a dangerous chain reaction unfold, and the financial dominoes are starting to fall. Stay sharp, stay vigilant, stay highly informed. The dollar endgame is playing out right now.